Before anyone thought about Tesla stock, ARK Invest's CEO Cathie Wood has always had faith in the company and its future. Cathie Wood has always been optimistic about Tesla stocks, but she has a huge warning for other buyers in Tesla stocks today. Wood recently sold some of her shares in Tesla, which surprised a lot of people. But if you've been paying close attention to her for a while, you'd know that this is all part of her plan for disruptive innovation. Still, Wood has some important tips for Tesla buyers about what might happen to the stock of the company in 2022. Why does Wood worry about the price of Tesla's stock? What does she want to say? Find out today in our film. Many experts and researchers think that 2022 will be a big year for Tesla because of what will happen in 2021. Last year, the company that makes all-electric cars and stores batteries said a couple of interesting things. For example, the company said that its Berlin and Austin gigafactories would open before the end of 2021, even though there had been some bumps in the road. Even in Berlin, Tesla could not keep their vows. The Berlin Brandenburg plant was supposed to open in 2021, but it couldn't because, among other things, there were problems with the government and pushback from environmentalists. The Tesla plant in Austin, Texas, is all set up and seems to have started hiring people, but it hasn't been open to the public yet. Even so, Musk's new claim that the new factories will open in early 2022 is likely to come true, since they did not come out in 2021. Once these plants open, they are expected to make a big difference in how many cars Tesla can make and how quickly they can deliver them. This is an important step for Tesla as they try to make more cars and sell them in more places around the world. A factory in Berlin would help the company sell and make more money in Europe, just like the Shanghai plant helped the company in China. The Austin factory, which has been called the Cybertruck factory, would let the company make and sell the Cybertruck, which is their most wanted car ever. Tesla is a company whose main goal is to make the world better. They have been creating vehicles that run on renewable energy since 2008 and have been building energy and energy storage solutions to aid their goal of a greener Earth quickly. Tesla has a lot more planned for 2022 than just the plants. This makes a lot of buyers want to buy Tesla's stock because they know it will go up in the next few months of 2022. The stock price of the company is down at $965, but many people want to buy because they know a rise is coming soon. But before you do that, you might want to hear what Cathie Wood, a longtime investor who is optimistic about Tesla, has to say to other investors. Wood wrote a piece about Tesla's stock and gave an update on what she thought the stock would do in 2025. So let's talk about Cathie Wood and what she thinks is the biggest risk to the stock market and economy as we get closer to 2022. Cathie thinks that deflation is the most dangerous thing. On the stock market, some stocks are in a bubble. Their main goal is to keep investors happy by giving dividends so that investors don't put money into new ideas, which could hurt them in the long run. The case for good decline in the long run is very strong. The ARK study, which is based on Wright's law, says that 5 innovation platforms will cause deflationary pressures that will build up over time and affect every sector, business, and company in the world. Research shows that the cost will go down by 28% for every doubling of the total amount of whole human genomes sequenced using long-read technologies. Those tied to short reads, on the other hand, will be cut by 40%. Costs go down by 50% and 28%, respectively, when the number of industrial robots and batteries made doubles. Every year, the cost of training in artificial intelligence goes down by 60%. Current study shows that these platforms are coming together, which could lead to even bigger cost cuts as these curves reinforce each other. For example, you might not think it, but by 2030, robotics, energy storage, and artificial intelligence will come together to make self-driving taxis with a lot of growth potential. Self-driving car networks could grow from not making any money now to making between $9 and $10 trillion worldwide. When added to the productivity gains from the time drivers aren't behind the wheel, this could add up to more than $20 trillion. This cyclical case for deflation is a lot more controversial. Supply chain bottlenecks that have lasted much longer than most of us expected have fueled debate, and the University of Michigan Consumer Sentiment Index has dropped to levels lower than those seen during the coronavirus crisis, as stimulus payments pushed the savings rate up to 33% in the spring of 2020. Consumer spending on goods, which makes up about a third of all U.S. consumption, went through the roof, destroying businesses that had already shut down before the coronavirus. Due to trade worries between the U.S. and China and a yield curve inversion in late summer 2019, companies were already in a risk-off mode. As companies shut down in early 2020, some households used government stimulus funds to stockpile goods, making their homes and garages fuller. People started shopping for the holidays early. This year, people were afraid that stores would be empty, which drove the CPI inflation rate up to 6.8% in November 2021 and made some supply chain problems worse. Because of this, demand growth is expected to slow down a lot over the next 3 to 6 months, just as problems in the supply chain clear up. This could leave firms with too much inventory. If ARK Invest is right, the market will probably pay more attention to the chance of a recession in the United States, a major slowdown in the Chinese and emerging market economies, and a possible unexpected drop in inflation over the next 3 to 6 months. Some commodity prices have already turned red. Iron prices have dropped 36%, possibly because of China's real estate problems. The Baltic Freight Dry Index has dropped 39%, DRAM prices have dropped 27%, and U.S. wood prices have dropped 35%. Even the price of oil, which was a big exception until recently, has gone down by 15%. Cathie Wood has been trading on the stock market since the 1970s. She said that in her time as an investment officer, she has noticed that when clients or investors see that a disruptive innovation strategy has failed, maybe because of bad news in the media, most clients end up selling their shares of a stock for low prices or near the bottom of the market cycle. She thinks that the client would turn what was supposed to be a temporary loss into a lasting one through this process. This is why investment companies like Wood's ARK Invest focus on 5-year investment times. During this time, they keep their clients up to date so they don't make any bad choices. What they wanted to say most. Innovation fixes problems and will make people's lives much better in the next 5 to 10 years. ARK Invest takes advantage of volatility during downturns and focuses their investments on the stocks they believe in the most. Since the middle of February 2021, many broad market averages have reached all-time highs. This is because investors have moved away from growth companies and towards value and defensive stocks, such as the FANGs, Facebook, Apple, Amazon, Netflix, and Google. There are worries that inflation might not be a short-term issue caused by problems in the supply chain, but rather the result of too aggressive monetary and fiscal policy. The main reason for this change is how people are reacting to the coronavirus and its offspring. When the economy is doing well and inflation is high, value stocks like energy, financial services, industrials, and mining tend to do well. At the same time, raising interest rates could hurt long-term assets like bold growth stocks by making discount rates go up and lowering the value of future cash flows in the present. Wood doesn't seem to care about how the stock market is going right now. She has been selling Tesla shares, but the company is still ARK Invest's biggest holding. Cathie Woods thinks that a big change is on the way. She thinks that the world order would change and that traditional ways of investing would not work. ARK Invest has been the talk of Wall Street for the past few years. It has been beating the market and solidifying its place as one of the top players in the financial industry. Many people have compared Wood, who started and runs this investment company, to Warren Buffett's rising star. Many traders try to copy the moves of famous investors and big trading firms to make money off of their success. What do you think about the advice Cathie Wood gave to investors? Add your thoughts below.